After this month, every YouTube paycheck I make that is more than $500, I will be giving a portion of it away to my viewers, showing my viewers that they are watching someone who actually cares about their audience.
I won't stop till I hear him say,
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, we are going to cover three bullish positions, three buy positions that I placed on GBP JPY, a forex pair that we commonly trade here at CYPRX. If you guys are interested in learning about this technical analysis breakdown surrounding these three trades, make sure that you guys stick around. We're going to be covering some very interesting key topics. I'm going to show you guys screenshots of all my entries, show you guys screenshots of some of the things that I said to the CYPRX students. Again, if anybody is interested in that mentorship, the link is in the description down below. You guys can always reach out to me, schedule a Zoom call. I'm more than welcome and willing to hop on a call with you and explain what you're going to have access to when you enroll in the CYPRX course material and screen share with you all the course material that you will have access to. Blessings to you guys. Thank you all for returning. Let's get started into today's deep dive video breakdown. We are going to be talking about the three most common things amongst the three trades that I placed in the last two trading sessions, and that is a failure to close below previous market structure, identifying how the low with the candlestick bodies fails to break the previous low. This is a sign that the banks and institutions want to attack highs instead, and we can capitalize on that as retail investors, getting in and out of the market via scalp and intraday positions. Then we're also going to talk about breaks of previous market structure, lower highs. This offers the potential for a retracement to give yourself a proper risk to reward. Remember that our goal here as traders is not to capitalize on these massive risk to reward trades. It is to minimize our risk and capitalize on a reward by taking profit via logical target areas. So we're going to go over that as well, how each and every single one of these setups gave me the logic to say, okay, look, this is giving me a proper RR trade in the form of a 1-to-3 risk to reward ratio at a minimum via logical target areas. And then we're going to go over how every single target area that I had via buy scenarios on GBP JPY linked up with where retail trading liquidity exists. Remember, the bank and institutions are constant hunters of retail liquidity in the form of trend lines, double tops, double bottoms, you name it, retail support, right? Resistance, order block traders, whatever it is that you want to call it. The majority of the YouTube and internet jargon that 99% of traders trade is what the bank and institutions are attempting to tap out of the market via liquidity. So we're going to break all that down here today. Smash that thumbs up button if you guys like video breakdowns like this, and let's get started. So the first screenshot that I want to share with you guys is something that I said to the CYPRX students, where I said at 11:07 p.m. I'm going to stick to trading buy setups this week as long as price is above 162 psychological level. We break that psych level with bearish momentum and lower high close underneath, and I'll reconsider an evaluation, right? Well, if you guys can look and see where GBP JPY price action is currently ranging at right now, we are still operating above that 162 psychological level threshold. And as you guys can see, the three buy scenarios that I'm going to break down for you all today played out in my favor. So the analysis that I sent to the CYPRX students could have given them an edge in the market, giving them a heads up like I consistently do time and time again every single week that CYPRX has been in business. All right, so let's dive into the first trade breakdown during London session. This trade entry was very beautiful. Now, something that I want to be very, very transparent with you guys about is how long it actually takes to situate yourself on the right side of the market. Okay, now here in California, London session is extremely hard to trade in my personal opinion, because this requires you to stay up very late at night. London session starts here in California at about 12 a.m. Pacific Standard Time and lasts until about 4:30 a.m. Pacific Standard Time, or at least that's where the meat of the session is, where you can catch the best trade entries. Now, just to show you guys, to be very transparent, how long this trade took, I had to stay up the entire London session. I was extremely tired, and then I rolled over into New York and didn't catch any sleep and stayed up through New York session. Trading requires a lot of energy and a lot of time and a lot of patience. Do not let anybody manipulate you into thinking it's just some get rich quick scheme where you just hit buy and sell. It takes a lot of maturity in yourself, in your development as a trader, to excel as a profitable trader. Now, measuring from where London session opened to where I caught this trade, you guys can see how long it was that I was sitting looking at the charts, roughly at about 3 hours and 45 minutes. But the amount of return that I made on this trade was very well worth it. In a previous YouTube video, I'd mentioned to you guys sacrificing your time for money, and that every single millionaire will tell you that you should not be sacrificing your time for money. You should learn how to make more money in a small amount of time. Well, if this trade entry from London session open, where I sat and started looking at the charts, took 3 hours and 45 minutes, you guys can see where my entry was on my MetaTrader 4, and roughly I made about $3,019 after I took profit on this trade. Now, that is about $1,000 per hour. So was this trade worth it? Absolutely, in my opinion. To sit here and say that I can make $1,000 in an hour is absolutely phenomenal and well above a minimum wage salary. Now, that's not to brag or boast about how much money I make trading Forex. That is just to be completely transparent with you guys that this is not a get rich quick scheme. This is understanding why the markets are here, and they are here for us as retail investors to understand the concept of making more money in less time. All right. So without further ado, let's jump into the technical analysis breakdown. I just wanted to give you guys that spiel. But the 3 key highlights from each and every single one of these trade breakdowns. Now, you guys know that I like to go into extreme detail, but we're going to attempt to try and stick to this list during this trade breakdown. So this first trade entry during London session, let's zoom into where I entered into price action, and here is that screenshot of my MetaTrader 4 entry. I entered roughly in at about 163771 psychological level, and I entered into this position with a buy stop. Now, because I was extremely tired, I was actually laying in bed looking at my cell phone during the time of this trade. I wasn't actively sitting at my computer. I wasn't looking for market execution. I simply just wanted to relax and get a notification to my phone that the market entered me in, and when I feel that type of way, I utilize a buy stop scenario. Okay, so for this trade breakdown, the first thing I want to take your attention to is the London manipulation window. I talk about this manipulation window time and time again on this YouTube channel, that it exists during every single session open, whether that's Tokyo, London, or New York. So here we can see retail trendline liquidity from impatient sellers in the market and attempting to assume that the market is going to sell off during London session, right? We know retail traders like to trade retail trend lines, so we can assume that they are most likely taking over leveraged positions from these highs during the manipulation window in the form of a trend line, right? They're trend line trading. They see a touch of a trend line, they're taking sells. They see a touch of an imaginary trend line, they're taking sells. So we see this trend line liquidity forming during the manipulation window. That is a key for us here at CYPRX and for you guys on the YouTube to say, okay, look, if we fail to attack liquidity from lows, where most likely is the most logical target that the bank and institutions are going to come and attack? Well, that area is the retail liquidity above highs. If the market makers are failing to show you a willingness to attack liquidity from lows, then most logical target areas after that are going to be highs. So with all that being said, you guys can see here, as soon as we break out of the manipulation window, what happens? You guys can see here, if I zoom in, that we fail to break the previous low, and we start to print the definition of bullish order flow. Higher high, higher low, equal highs, higher low, equal highs, higher low. Again, this is the market makers building liquidity, failing to show us a willingness to attack previous lows established in the market, and then making a run on highs. This is bullish order flow. This is a scenario where we can say to ourselves as retail traders, once the market starts to break fractal structure highs, this gives us a better setup for the market makers to pull back into a discounted accumulation zone, or as retail traders like to call it, a demand zone right here in this general vicinity, to give ourselves a better risk to reward trade. But that's not all that comes with trading. It's a little bit more complex than that. So with that being said, we like to wait until the market shows us a sign to break previous market structure lower highs. Well, where are the lower highs in this bearish price leg? They're at these areas right here that I'm going to mark off for you guys with this highlighter tool, right? So once we see the market maker start to make a run on these highs, we can say to ourselves that the market is breaking previous market structure, which leads me to number 2. Okay, so we see a failure to close below previous market structure lows with candlestick bodies. That's number 1. We'll look at this low right here. None of these succeeding candlestick bodies close beneath the low that broke out of the manipulation window. So we can assume that this entire bearish leg right here was a manipulation move. Why? Let's talk about logic in the market, because logic in the market says that if this was proper bearish order flow, the market would do what? It would continue to make lower lows and lower high formations, which it failed to do so as soon as we broke out of the manipulation window. The market structure shifted and we started to create higher highs, higher lows, equal highs, higher lows, equal highs, higher lows. This is the market makers failing to show us an interest in grabbing liquidity from lows, and instead we have to assume if they are not interested in grabbing liquidity from lows, again, where is the next most logical target area, understanding that the bank and institutions have to target liquidity to move this market. That is going to be above highs, right? So you can start to structure how we came in to take this trade during London session, right? So now we get into the break of the previous market structure, lower highs. Again, these lower highs that I identified for you guys with this highlighter tool, we can see that this market structure leg breaks these market structure highs. Now this leads us to the last key highlight, logical target areas and retail stop losses. So coming into this New York session, London session rollover, I started to see that the market was tapping into this quote unquote demand region again, but we know that banking institutions do not trade based off supply and demand. They trade based off of psychological levels. And that demand zone, again, quote unquote, is what retail traders like to call it, is the 163,600 psychological level. You guys can see how the banking institutions took an institutional order from the psychological level 163,600 and moved price away from that psychological level, breaking previous market structure highs. Well, you guys look at this pattern right here. This is the pattern that I teach you guys to identify on the CYPRX YouTube multiple times, which is a sweep of liquidity beneath lows and a run on market structure previous highs. This is a market maker pattern. And when you understand this, you understand that the market makers are the only people with the amount of money to make this pattern, where they forcefully push the market into a discounted region for themselves, previously grabbing areas of liquidity and then moving the market in their favor, adding buy positions. Well, once we see this market maker pattern happen, we can assume that somewhere over to the right-hand side, utilizing our Fibonacci tool, we can jump in to discounted price. Why? Because we know that the banking institutions need to add to their order. They cannot put in one institutional order. They have to put in multiple orders. And as you guys can see from this price action, we have 1, 2, 3, 4 institutional orders from a discounted area that the banking institutions put in before rallying price during London session. All right, so I hope that I'm not confusing anybody here, just to show you guys that the banking institutions have to add multiple orders. They have to scale in to discounted prices by manipulating price to the downside in the form of enticing sellers via retail trendline liquidity, and then manipulating price in their favor to take discounted buys, then shifting the market momentum in their favor. So once again, we see this market structure happen, we can get in to the right-hand side as retail traders. Now, once we tapped back into this discount, I just want to show you guys, once we broke previous market structure highs, I took my Fibonacci from the low to the high that broke market structure, which is this high right here. I'll go ahead and identify that. This is now the new A to B move. Once we broke out of the manipulation window, that is again another green light for us to place trades here at CYPRX. We do not trade inside this manipulation window. So the ideology behind the fact that this trade placed outside the manipulation window was a green light for us to go ahead and risk our capital, right? Well, once the market broke previous market structure, we had the clear green light for what? An institutional market maker pattern. This gave us the best risk to reward setup, our stop loss beneath the previous low. Why? Logically speaking, we know that if the market makers come and attack this low, then they are not buying price action. They are going to continue to sell. So this gives us a better risk to reward ratio, having our stop loss beneath these lows here and targeting what? Highs, giving us the best risk to reward, the best bang for our buck, buying it where institutions are buying. Again, they are manipulating sellers to the downside in the form of retail trading patterns to come and give themselves discount in the form of manipulation moves outside of the manipulation window to then give themselves a better position to place buys and add to their order. Right? We know that the banking institutions cannot put in one institutional order, where we see here one massive order. They added to it, and then finally fulfilled their last order and pushed the market all the way to where they needed to push it during London session to facilitate liquidating retail trendline traders over here during the manipulation window. So that is how I was able to catch this beautiful buy scenario during London session. Moving over to New York session, we're going to utilize the same exact scenarios, right? We see here coming into the New York session manipulation window, we are operating and creating what? A double top formation. This is a retail trading pattern where we can assume that liquidity exists above these highs. So if the market makers fail to attack liquidity beneath lows during the manipulation window, which again is roughly around this general vicinity, I'll go ahead and draw a little box area for you guys. Well, look at this. We see a bearish leg move down into a low and fail to take out that low. We see another bearish leg move down into a low and fail to print bearish candlestick closes beneath the previous market market structure low that rallied and broke previous market structure highs. Again, this is that same institutionalized pattern where we see the market makers showing us a willingness to grab internal liquidity and make new market structure highs. We know that the banking institutions have to facilitate multiple orders to situate the market where they see it fit, so we see them doing just that. They are playing with retail traders during manipulation windows to entice sellers. Well, we see the market break out of the manipulation window. Now we'll get into detail as to why I entered into this trade right here. Okay, so one of the confluences is right here in this bearish candlestick. I want you guys to really pay attention. If you've made it this far in the video, please pay attention. Look at this one entire bearish candlestick. This entire bearish candlestick literally engulfed this entire area of price action. Okay, if this was a valid bearish candlestick based off of what you can read on the internet and based off of what you can read on baby pips, then 90% of retail traders, you can assume, were selling when they saw this bearish candlestick. Why? Because the definition of a bearish candlestick means that the market is most likely selling off or the market is going to reverse. Well, once we see this bearish candlestick and we see it fail to close beneath the previous low, we understand that this is the market makers showing us the lack of interest to grab liquidity beneath lows and fail to shift market structure. Where are they most likely going to attack next if they're not going to attack liquidity beneath these lows? Liquidity above highs, right? So we know that, and we know that once the market makers show us a willingness to shift structure, we can get in on that temporary bullish order flow. Again, we are scalpers in the market, intraday traders. We're looking to get in and out of the market as swiftly and as quickly as possible. Well, guys and gals, the same institutionalized pattern that I just showed you on the previous trade, where can you identify that? Pause the video real fast if you've made it this far and show me where you can identify this pattern before I show you, so that way you can prove to yourself that you are learning. Well, that pattern is right here. We see a low, we see the market sweep that low, we see the market print a intermediary high, we see the market fail to print a new market structure lower low, right? And what does the market do? It prints a higher low, higher high formation. This is now bullish order flow. A high, higher low, higher high formation. So I said in the previous example, one of the confluences that we look for here at CYPRX is a break in previous market structure. Guys and gals, is this not a break in previous market structure? This intermediary high right here took out the previous high. This is now a higher high. Even though it is fractal, it is undeniably a higher high in the market compared to the previous one. So simply all I did was ask myself, is this a proper risk to reward ratio? Confirming the ideology behind in the market, you have to give yourself the best risk to reward trades. Well, yes, this is very small risk to attack a very high reward, right? So stop loss beneath the previous low. Again, logic behind the stop loss, where if the market comes and attacks this low, we know that the market is not ready to buy and it is still printing the definition of a downtrend, right? So we are minimizing our risk and maximizing our reward by attacking what? Highs. If the market is showing us a willingness to attack lows and make new market structure highs, which it did right here, it attacked lows in this area, it shifted momentum, created a higher low, and created a high. This is the market showing us a willingness to attack highs, right? So we know now that the market has shifted momentum, they have a willingness to attack highs. And would you guys look at that? Minimizing our risk, maximizing our reward, taking our Fibonacci again from the market higher low that led to the market break in structure, taking our fib from the low to the high, extending that over. You can see right where our entry was at, right in the sweet spot of 62 to 79% discount, attacking the discounted price where banking institutions are most likely going to add to their orders to, again, logically target what? Retail trading trend lines, retail trading order block traders, retail trading support and resistance methodology traders. You guys can see here via a screenshot where I said to the CYPRX students, once I entered into this position, I sent them this black line is my target at 5:46 a.m. That is this black line right here. Okay. Now, why was I targeting this area of interest? Because order block traders, let me go ahead and clear up the charts for you guys. Look what happens when I take all the clarity away. It looks confusing, right? When I take the clarity away, when I take the analysis away, it's like, what the heck is going on? We see up and down movement and that's it. When I give you guys the clarity, you can really dial in. But right here, before the down move, we see an up candlestick. this candlestick right here would be identified by an order block trader as an area of interest to take sell positions from if the market comes back into this area. So once we saw the shift in momentum, we understand how order block traders are taught how to trade. They are taught to take sell positions at these order blocks with their stop losses nice and tight above the order block just in case, and for them to take sell positions for a market continuation down. Well, we know that liquidity exists right above this order block in the form of retail trading stop losses from people that will have sell limits at this order block. So what happens? The market makers make a run on that liquidity right here. You guys can see them tap into the area of interest. So that was my logic behind this trade. We were going to move in tandem with the banking institutions, making a run on that liquidity before they sell the market off. Now, a lot of people will ask me, oh, Cypress, why didn't you just take sell positions? Because I do not take sell positions based off of retail trading methodologies. I move in tandem with what the banking institutions are doing, and you guys can clearly see that the banking institutions were making a run on retail liquidity before they filled their sell positions. I am able to identify that shift in momentum. Here at CYPRX, we teach to trade with that shift in momentum for us to move in tandem with the banking institutions to come and attack retail trading liquidity. So that trade entry was very beautiful. It was right here, roughly in this general vicinity, and we tapped into that black line. Here are my MetaTrader 4 screenshots for my entry. And again, minimizing your risk, maximizing your reward, and understanding what the goal is when you are trading these markets, and that is to make more money in less time. So showing you guys, again, proof is in the pudding, the same exact confluences from the previous trade where we had a failure to break the previous low. We had a market shift in momentum. After we grabbed liquidity, we created a higher high, higher low, higher high formation. I simply took my Fibonacci extension from the low to the high that broke previous market structure. Again, here's that entry from the low to the high that broke previous market structure. We took our Fibonacci from the low to the high and entered roughly in this area at around 62 to 79% discount. This is minimizing our risk and maximizing our reward. This is a certain set of confluences that we look to play out with here at CYPRX. And again, nothing is guaranteed in this market. Our goal as traders is to give ourselves an edge, a well-defined edge in this market by minimizing our risk and maximizing our reward based off of logical target areas. Last but not least, we will go into this last trade breakdown where I entered all roughly in this general vicinity. I had buy limits set and those buy limits were executed. You guys can see from the MetaTrader 4 screenshots that the buy limits were executed at 163.185. So I'll go ahead and mark that psychological level off for you guys. Okay, 163.185. Without going into an extreme detailistic perspective, just to show you guys again the same set of confluences that we trade, pause the video and see if you can identify the market maker pattern. Okay, here's the market maker pattern. We see a market maker move and a shift down into an area of liquidity. We see a market maker move away from a psychological level that matches previous bearish momentum. We know based off of logic that if this was a proper bearish move, what would have needed to take place? A lower low, lower high, lower low, lower high formation, right? A continuational move to the downside. Well, that failed to happen. What do we get? We get a bullish match of momentum that breaks previous market structure. This is the green light for us to say that the market makers are showing us a willingness to grab liquidity from lows and make new market structure highs. Not only did they make new market structure highs, but what do we see in this general vicinity? Again, can you answer that question? We see retail resistance. Retail resistance traders would most likely be selling these three areas as a triple top formation here, here, and here. Looking at this as some type of imaginary retail resistance or taking a trade from maybe potentially this order block here. Again, the up move before the down move. Order block traders are highlighting this, extending a box over and taking sell limit positions from these order blocks. We know that here at CYPRX. Well, we understand a shift in momentum in the market and what the banking institutions are doing. They are attacking lows and making new market structure highs. So simply all we did once the market broke a previous market structure high is we took our Fibonacci from the low, extended that up. I set buy limits at roughly at around 163.185, which just so happened to be at the 70% discount again, where banking institutions, if they are going to add to their order, like to add to their position. And we saw a nice appreciation and buy off on that initial order where the banking institutions manipulated price down into discount for themselves roughly at around 163.100 psychological level. This was a beautiful risk to reward trade, again minimizing our risk and maximizing our reward. Why is this minimizing our risk? Because we're entering in at a low, and we know that if the market moves against us and the market isn't ready to buy off and our analysis is incorrect, what's going to happen? We're going to lose 14 pips here if we're entering at roughly at around 70% discount and the market breaks this market structure low. The market's going to dump and make a new low, and we're going to lose 14 pips. If you're risking a proper amount of money, which here at CYPRX we try to teach our students that's anywhere between 1 to 2, 3% max, we can get that back with this strategy. Why? Because we chase 1 to 3 risk to reward setups. 9 times out of 10, the CYPRX confluences that we teach here play out time and time and time again in the market. We've shown you guys that transparency here. I've shown you guys all of my entries on MetaTrader. I've shown you guys what I've said to the CYPRX students. I hope that you guys enjoyed this video breakdown. I hope that you've picked up some gems here and there. Again, this is just scratching the surface on the type of information that I give to the CYPRX students. This is very vague, going over breakdowns, giving you guys gems on the trade entries that we place here at CYPRX. I know that you guys enjoy the transparency. If you do and you're not subscribed to the YouTube channel, make sure that you do so now. Don't forget that once we reach 10,000 YouTube subs, we're going to be giving away 100 XRP, a CYPRX t-shirt, and a CYPRX hat. Don't forget also, I mentioned to you guys in the previous video breakdown that every single month I make $500 or more from YouTube ad revenue. I'm going to be giving away $50 of XRP to one lucky YouTube subscriber. So blessings to you guys all. I hope that you guys enjoyed this video breakdown. As always, be cognizant, be aware, smash that thumbs up button, subscribe, and I will see you guys in the next YouTube video breakdown.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh, la, 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 la.